checking in no bag, shopping when we land. Big FN bag of ball. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
If you're someone that doesn't know which market exactly to be trading, whether the futures market, Forex market, options market, or crypto market, well, this video is going to be perfect for you. So I'm going to be starting this series on my channel for tier listing, trading related things and concepts, and that's going to be the start of this series. So today I'll just be going over the reasons as to why I put each one of these markets in S tier, A tier, B tier, C tier, or D tier. And yeah, so let's just first get started. We're always going to start with the best one. Okay, if you guys don't know, S tier means the best, D is the worst. S tier, I'm going to be putting futures. So futures trading to me is S tier compared to the other three markets here. I personally, by the way, have traded all four markets. Okay, I've traded futures, or I currently trade futures on a regular broker, Trade08. For those that you know, always trade on a regulated broker. Never trade on something that's unregulated because your money is not safe, right? So I trade futures on a regular broker, Trade08, and I used to trade options on Webull, and I still do from time to time, but I've been favoring futures a lot more and been putting a lot more of my investments into the futures account. Okay, I used to also trade Forex before I started trading futures. So you guys know back then a lot of people were trading Forex only because CFDs were basically legit, I guess, in a way, right? But then these firms, a lot of Forex firms started shutting down, but these funded firms, so then a lot of people switched over to these futures prop firms. So yes, I switched over just like them. So again, I don't trade Forex anymore, but I used to trade Forex before the switch. And last but not least, we do have crypto. So I used to trade on BingX, which is a regulated crypto platform. As you guys can see, there's consistency, what I'm saying. Always trade on something that's regulated. Don't trade on something unregulated. That's the key to, if you really need to take one thing away from this video real quick, just trade on something regulated, please, within your country. So I put futures as S tier. And I'm gonna give you guys my reasons here first. Why? Number one, futures has no spread. So unlike crypto, unlike options, unlike Forex, the futures market has no spread. Everything is centralized, meaning gold does not have multiple different brokers providing different data and different charts and different numbers to you guys, right? The gold price, let's say gold price at 2,700. It's going to be consistently 2,700 for everyone trading futures. It's not going to be different depending on different exchanges. What happens on these other markets like crypto, options, or well, mainly just Forex, honestly, the main Forex market, you will see, especially if you go on TradingView, you will see that there is so many different exchanges and brokers that you can pick from when you're selecting the same asset. For example, on gold, you can have gold from comics, you have gold from many different types of exchanges, and some of them are very bad and some of them are very good. And you'll see a lot of data discrepancy between the quoted price that they're giving you on each one of these brokers. That's why it is very important to have something that's centralized. And so what happens is when something is centralized like futures trading, you don't have no spread essentially, okay? Everything is in one place. Everyone's trading the same price, same thing. You're all looking at the same exact chart. So therefore buyers and sellers are looking at the same thing. Therefore they're able to provide you with no spread at all, which is very good. So that's a major con, by the way. Spread, with no spread, increases your risk reward on every single trade you're taking. Number two, which is, yes, there's commission, basically all four of these markets, by the way. So we're not going to talk about commission today, but yes, there's commissions in futures, just no spread, unlike the other three other markets. Aside from that though, futures also provides, like I said, something centralized, so you don't have to worry about getting data from different exchanges, things like that. And honestly, I just found futures to be just a lot more reliable because you almost always will get filled instantly at the exact price you're looking for. And it's just very easy also as a thing to backtest. You don't have to worry about finding which exchange to be backtesting your strategy on. There's only one exchange that futures trades go through. And there's so many things you can trade on the futures market. You can trade gold. There's even Euro USD futures. There's certain currency pair futures also. Although most of the currency pairs are on Forex, but there are certain ones. You can even trade indices like ES, NQ, all sorts of these popular assets and pairs you can trade on futures. So that's why I put futures at the top at S tier. Next up, I'd say would be Forex. And the reason why is I'm gonna put Forex right below futures. Okay, Forex, you guys know, was the thing, especially funded prop firms before a lot of them got shut down because of CFD regulations, depending on your country, of course, right? But the point is Forex is just like futures. There are a bit more things you can trade actually in Forex. Well, in terms of currency pairs, you can trade more, right? You could trade things that are more exotic like USD JPY or GBP USD, all sorts of different more rare currency pairs that not many people trade, or not as many people trade, but those all exist on the Forex market. There's so many currency pairs that you could be trading on the Forex market. Forex also does include indices, by the way, as well as, you know, XA, USD, oil. So does futures. Futures also includes oil as well. Forgot to mention that. It's called WTI on there, crude oil. But, you know, Forex basically includes everything futures has to offer. The only problem with Forex really is that Forex does have spread. And depending on if you're trading personal or prop firm, typically personal accounts with a regular broker, your spread's not going to be too bad. But especially on funded prop firms, some of these firms are sketchy and they will give you very bad spread and bad trading conditions environments. So that is something you definitely want to watch out for really when you're trying to decide which prop firm you're looking for. Ask what the spreads are, make sure and verify that those are the actual spreads you will get, because sometimes you might get low spread in the challenge account, challenge phase, and then when you get moved on to the live account, what they call live account, the spread doubles. I've seen that happen. It's happened to me before, and I'm not going to mention specific names of firms out here, but I basically don't trade for these types of firms anymore that do this, because it's just, come on, man. That's just clearly they're clearly trying to milk the most money out of you and trying not to let you get payouts, even though you still can. It's just a matter of the annoyance having to battle against that, really, especially when spread can get very big. Me scalping as a scalper and intraday trader, these spreads could make a difference between almost one risk reward at times, right? Depending on how far my target is. So something definitely to keep in mind. But Forex, I'll be putting at A tier. Now, next up, I would probably put, honestly, these two. I'm gonna put crypto. So crypto, I traded crypto for about 3 to 6 months around. I think it was around 3 to 6 months, yeah, on BingX, like I mentioned earlier in the video, regulated broker as well. Make sure you're trading on everything regulated, right, where your money is safe. And I've been able to flip like small accounts multiple times to big numbers. But the problem I find with crypto is sometimes the volatility is too much and you could get slipped under stop loss, which is not good. So slippage is when, for example, if we put a stop loss at let's say negative $1,000 on your account, if it hits your stop loss, there are times where on the crypto exchange you will get slipped at negative 1.3k loss instead of 1.1k loss, and you could say it's a 30% more loss, but those losses add up a ton, especially if you're trading a lot. And so that is a very big problem when it comes to trading crypto. For me, crypto, really, when I was trading, I was mainly just trading big BTC USD, Bitcoin. Not much really Ethereum, but mainly just Bitcoin. So for me personally, I know there's a lot of things you can trade on crypto, but really the most reliable one that I can really trade with my strategy would be something like Bitcoin, where there's a lot of liquidity. Other than that, if you're looking at very low cap, small cap crypto, I would not touch any of those, because most of those are just pump and dumps and just gambles. And I like to trade based on strategy that works, which is what I teach in the course and mentorship, and not gambling. So that's my reason for picking crypto at C. I don't trade crypto anymore. I don't day trade crypto anymore, is what I'm trying to say. I still have long-term portfolio for crypto, but I don't day trade crypto anymore, because I found futures to be so much more beneficial, so much more upside to futures. Last but not least, we got options trading. My boy, options. So I'm gonna be putting options, honestly, at the same level as crypto, just because it's what started my trading career. So when I started trading about 3 years ago, I started with trading long-term shares of companies, right? Tesla, AMD, Apple, ES, basically just S&P. I used to start trading shares. And then later on, a few months in, as I learned all these terminologies when it comes to trading, I transitioned to swing trading. Tried a little bit of swing trading, got some success, but also didn't do too great with it, and felt like it didn't match my personality. I like to make money fast. I like to know if I'm wrong fast and if I'm correct fast, right? I want to be making daily profits. I don't want to be living off of one trade a week. And if that trade hits stop loss, I'm negative for the whole week. When we're day trading, you can very easily have green weeks back to back consecutively, as long as you manage your risk properly and trade the proper strategy that works. So from my opinion, options was really nostalgic to me. This is how I started, right? I went from shares to swing trading to then swing trading option contracts and day trading option contracts. 0 dates till expiration. If you know, you know. 0 DTE SPY contracts are no joke for sure. So I was trading that in the beginning. But I would say the main problem with options really is there's also spread, by the way, on options. Just to let you know, there's spread between bid and ask price when you're buying an option contract. So instead of saying you want 100 shares of an option contract that's worth 0.30, which times 100 is $30, you might get filled at $31, right? And when you sell, vice versa, you might get filled at the bid price instead of the ask price, which is higher. So you actually get less value out of your contract when you sell. So there are just a few things honestly with options, but I did really love Webull options platform. So you guys can definitely check it out. I do have, by the way, links in my link tree down below if you're interested in signing up with any of the brokers I'm using that are fully regulated. But the main downside to options, I would say, is data decay. Data decay, which is also known as time decay, is the longer you're holding a trade and the closer it gets to expiration, the more exponential the decay gets, meaning your contract is losing value and your position is losing value over time, regardless of if the stock is moving up or down. So if the stock is staying at the same price as you entered, you're losing value, you're losing money over time, regardless if it goes up a little bit, right? There's natural loss of money, unless you're selling options, which I was not doing, right? I was the one buying and trading, facilitating options. So unless you're selling options, then it's vice versa. But time decay does hurt you and it goes against you. And if you trade options, you know exactly what I'm talking about. So I'll say that's the main reason as to why I would put options so low. Otherwise, honestly, options is very fun. I'm not trying to sound like a degenerate here or a gambler here, but if you really know what you're doing, right? If you have a proven strategy like me with proper risk management, you can make really good returns with options as long as you know exactly when to get in, when to get out, and not hold your trades for too long towards the expiration date, especially with 0 DTE, where the data decay is very, very strong the closer it gets to market close. So that's basically it for today's video. That wraps up my tier list for the 4 different types of markets that you guys can trade. I hope this video does educate beginners mainly. I'd say that I would probably click on this video and what type of markets that you guys want to trade or are looking into trading or interested in trading. If you have any questions, feel free to DM me on Discord. I also have the course and mentorship if you're completely new or if you're intermediate or advanced and you still need a strategy that works. Check out the course and mentorship, and I'm definitely here to help you.